Uh, Welcome again to my channel. My name is Mr. Cleophas. Today, I want to just briefly explain about audit reporting because it's a common topic in Section 4 and that's in intermediate level and in foundation, in advanced level of CPA. This is a question or this is an area which is commonly examined. And I want to help my people, I want to help my followers, I want to help my students, so that at least also they can recommend my many people to my channel, and they can also help in they can also help people in this area. It's a common area that's in auditing and assurance, in also ATD3 auditing, and also in advanced auditing and assurance. So I want to explain without a lot of writing about reporting. Audit reporting is governed or is found in the standard ISA 700, forming an opinion and forming an opinion on the truth and fairness of the financial statements. And remember, expression of an opinion is both a legal and professional requirement. The legal requirement is as per the Act, which requires that each and every limited liability company needs to have the books of accounts audited, and that's the need for the audit, and then by the end of the day, auditor needs to express an opinion. When you read again about the Act, it says again, before auditor expresses an opinion on whether the financial statements they give a true and fair view, auditor needs to ascertain the following matters. Number one, whether the company has kept proper books of accounts. Number two, whether financial statements they are in agreement with the books of accounts. Number three, whether financial statements are in agreement with the generally acceptable accounting principles, that's the GAAP's general acceptable accounting principles. Again, auditor needs to ascertain whether he has obtained adequate information and explanations considered necessary for the audit. So any information auditor which he considers to be necessary for the audit, before he expresses an opinion, he should obtain such information. Number five, whether he has received adequate returns from branches not visited. You find auditor is auditing group of companies, then there are some branches he has not managed to visit. He needs to be furnished with the information from those branches, so all those components, to help him give a conclusion or an opinion on or about the whole company. From there, you need to know about the professional requirements. When you read ISA 500, ISA 200, and ISA 700, they all talk about the reporting. ISA 200, it's about the objective and general principles governing an audit, which requires the auditor to express an opinion. ISA 500 is about audit evidence. It requires the auditor to obtain sufficient and appropriate audit evidence on which to base the audit opinion. The 700 is forming the opinion, and it requires the report of the auditor to be in writing. Any report, then you can also be asked about the components of a report. Any report must have, so elements of a report or the components. One, there is no report without a title. So it should have an appropriate title. The term independent audit should be used in this title to differentiate this auditor's report from other reports that the company gets from other parties. So the term independent audit must be used in the title. You're saying it must have an appropriate title, and the term independent audit must be used in the title to differentiate this auditor's report from other reports the management or the company gets from other parties. It must be dated. This report should be dated as at the completion date of the audit. When auditor concluded the audit, that is when we should date the auditor's report. It should have an address. This is the location or the city in which the auditor holds the office, which he or has or which was in charge of that audit. So if we hold office in Nairobi, if you hold the audit firm in charge of the audit, it holds the office or the where it has its registered office, it's in Nairobi or Mombasa or another part of the country, then it needs to be mentioned. That is the address. Addressee also is very important. This report is commonly addressed to the shareholders. And in most cases, normally we say the report of the auditor, it is addressed to the appointing authority. Remember, appointment of the auditor, it is a concept I shall be covering or I have covered in other videos. It must have the introductory paragraph. So this paragraph should mention financial statements audited, name of them financial statements audited, the fact they have been audited, and the period covered by the financial statements audited. Name of the financial statements, the fact they have been audited, the period that they have been audited. So that is it. Another one is a scope paragraph. This paragraph should mention that the auditor, or we as auditors, the audit was conducted as per the ISA and the Companies Act. So the scope is the extent of doing the work. So we must tell to what extent are we or have we done the work. We have done our audits based on or as per the international standards on auditing and as per the Companies Act. Our scope is determined by the standards. Also, auditor's responsibility is a paragraph with respect to the auditor's responsibility. This paragraph will tell the responsibility of the auditor, or should mention that, or state that, or provide that the responsibility of the auditor, it is, with respect to financial statements, is to ascertain whether those financial statements, they give a true and fair view. That is our responsibility as auditors, to ascertain whether the financial statements, they give a true and fair view. Again, we have management responsibility with regard to financial statements. So we must mention that it is the responsibility of the management. So in this paragraph, it must provide, or it should state that it is the responsibility of management to prepare financial statements which gives a true and fair view, or to prepare financial statements which are free from material errors and frauds. Also, opinion paragraph is there. So opinion paragraph should have a clearly expressed what? Opinion on whether the financial statements, they give what? A true and fair view. We have different types of opinions which I shall be mentioning. Then we have signature. These reports must be signed by either, or should be signed in the name of the auditor or in the name of the audit firm, or both as required. So it must be signed to show that the auditor was in charge, or the firm which was in charge of the audit, and to take up the responsibility of doing the audit. Great. So from there, I want to explain about the scope limitation. Scope limitation, and there is a concept I want to explain about scope limitation. When we say there is a limitation in scope, it means the extent of doing our work was limited, or were prevented from performing procedures and tasks, or those tests we think are important. But due to circumstances which can be caused by the nature or by the company management, then we are unable to perform such tasks. In such a situation, the extent of doing our work is limited, thus scope limitation. When there is a scope limitation, it means you cannot do what you think is important for the audits. And this one can be because, for example, you wanted to attend the stock take, but the time of appointment, the time you appointed, it was when the stock take had already taken place. So your scope is limited. You are prevented from circularizing the data. Your scope there is limited because you wanted to confirm the data's balances. Again, the scope can be limited in a situation where maybe the inventory has been, there was fire outbreak, then the fire consumed all of the inventories, and in the financial statements they appear. The truth is, your scope is limited because you cannot confirm the stock value, and you cannot go to verify facts. Disagreement with management is another concept I want to explain because the opinion comes from there. The types of opinions comes from the disagreement and the scope limitation. So what is disagreement? The auditor is in disagreement or disagrees with the management if management, they do not do things the way they should be done. If the management, they have not disclosed information which is expected to be disclosed. If the management, they have not complied with the standards, auditor is in disagreement with them because auditor knows what should be done. If they don't comply with the Companies Act, that leads again to disagreement. If they do not they don't comply with the company policies and procedures, it leads to disagreement. And if they do not comply with the standards, it's a disagreement. So disagreement, it arises where the company management, they do things the way things should not be done. Right? Then I want now to explain about the types of opinions. Number one is unqualified opinion. Unqualified opinion is the best opinion. It is the opinion expressed by auditor where auditor is satisfied that the financial statements they give a true and fair view. Nimesema hivi, this is an opinion expressed by the auditor where auditor is satisfied that the financial statements of the company they give a true and fair view and where auditor has no reservation whatsoever. Said, expressed where auditor is satisfied. Everything is okay. Everything is right. Things have been done the right way. Auditor is satisfied. He gives the best opinion, is unqualified opinion. We also have qualified opinion. Another name for qualified opinion is except for. Except for opinion. This is an opinion expressed under two circumstances. One, where there is scope limitation, or where there is disagreement with management, and the scope limitation or the disagreement is not material. So I've said it is an opinion expressed by the auditor where there is scope limitation or disagreement with management. And that scope limitation or that disagreement, it is not what? Material and pervasive. It is not having negative effects to the company. It's not material, not significant. Then we have disclaimer, is the third type of opinion. Disclaimer of opinion. Disclaimer of opinion is an audit opinion expressed where there is scope limitation, which is material. So where the scope limitation is material, you give disclaimer. If the scope limitation is not material, you give qualified. We have adverse opinion. Adverse opinion is an opinion expressed where there is a disagreement with the management, and that disagreement is material. So, said an adverse opinion is an audit opinion expressed by the auditor where there is a disagreement with the management. And the disagreement is what? Material and pervasive. So, if the disagreement is material, this disagreement, if it is material, you give adverse. If the disagreement is not material, you give qualified. Then we also have another called unqualified opinion. With emphasis of matter. With emphasis of matter paragraph. So I want to explain about this emphasis of matter paragraph. So when you look at here, unqualified opinion, that is the best opinion. But sometimes you may find that everything is okay, but auditor, there is something you want the reader of the report to be aware of. Sometimes if the going concern of the company is threatened, and auditors looked at everything and said, oh yeah, the company is doing very well and everything has been done the right way and everything has been disclosed. Even the problem of going concern, they are disclosed. But because of the problem of the going concern, which auditor wants the shareholders or the readers of the report to be aware of, then he will say, I am giving the best opinion, but I want you to be aware of this matter. So he emphasizes on the uncertainties. He gives emphasis on some matters which he wants the reader of the report to be aware of. Like where the company's going concern is threatened. So that is about audit reporting. And I thought it is important for you to know this. So opinions, those are the audit opinions. And commonly, we don't use those words previously. Sometimes back, we talk of unmodified opinion. No, please. Let's use as per the standards we of currently. The best to use is unqualified opinion. Don't talk of unmodified. But there will be no problem. But let's use the correct and the latest terms used: unqualified opinion, qualified opinion, disclaimer of opinion, adverse opinion, and unqualified opinion with emphasis of matter paragraph. Guys, thank you for watching. If you want to, those O in section 6, a question is here for you, which came last sitting is April 2022. I've explained everything in question number 5. The Roman 1 says, describe the circumstances that could lead to each of the following audit opinions and the implication of each opinion. 1 is adverse opinion. Number 2 is emphasis of matter. Number 3 is disclaimer of opinion, and then exceptive opinion. Remember, qualified opinion, I said it is also known as exceptive opinion. Auditor is saying, except for the scope limitation, everything else is okay. Except for the disagreement with the management, everything else is okay. Thus, the use of the word exceptive for opinion. So that is another name for qualified opinion. Thank you so much for watching. My name is Mr. Clefas, and I want to thank my people for subscribing to my channel. May God bless you. May God be with you. Until the next session, where we shall meet in the next lesson. Thank you.